Now, if you've been following the financial service sector for the last 4 years, 5 years, they have been generating all the headlines, outsized bonus. I'm not talking about my panelists. They're the exception. They've earned all their bonuses and the Ferraris and the Porsches, right? But the banking sector around the world, certainly in the US and I know in Europe, has caught a lot of flack. And some of it rightly so. One, American taxpayers have to bail out Citibank. You wonder, is that the right thing? When British taxpayers bailed out 4 out of 5 biggest banks in the UK, they have every right to demand that bonuses not be paid, but not, as I said, to my fellow panelists here. What we have is a session that talks about financing successful business growth, opportunities and challenges for commercial banking. I know it's a mouthful, but there's a purpose for it. And what we're going to do is we have 1 hour, and 45 minutes is for the panel, and then 15 minutes or so is for you to ask questions, for you to feel like you're part of the process, which you are. In some of the sessions we run this morning, we run out of times, there was no Q&A, and some people weren't happy. They wanted to ask questions. We won't make the same mistake this afternoon. And what I'm going to do is, we've prepped everybody with sort of questions, leading type of questions that would elicit, I think, interesting responses, and also for you to start thinking about the sector. Through luck, Admasu has been selected as the first person. But before I do that, I need to introduce my panelists. Okay? You'll see their name up there, but just briefly. To my left is Mahdi Kazim. He's the General Manager, Large Corporates and Global Banking at Emirates NBD. I'm happy to say I'm a customer of Emirates on the personal side. Fantastic bank, definitely. Good customer care. If you want to do banking, go with Emirates. Admasu Taddese, I know him very well. He's a fellow Ethiopian, and he is the CEO of the PTA Bank. Now, I ask him, where do you live, where do you work? And he says sometimes he's in Burundi, sometimes in Nairobi, right, Admasu? So he's everywhere, but he's going to share with us from his perspective about the banking industry. And next to Admasu is John Mering, who's the Group CEO of Mayubeyu Group, right? Oh, did I miss somebody? Okay. Well, I was given maybe, I skipped somebody. Okay. And Mahmoud Mansour, who is the Executive Secretary of the COMESA Clearing House. Now, you need to introduce yourself because they skipped you on the list that they gave me.
I see.
And so you are from?
Yeah, I work for the Clearing House, COMESA Clearing House in Harare, Zimbabwe.
Okay.
But originally from Mauritius. But we're based in Zimbabwe. Yeah.
All right, so they got the, and then we got all 4 of you all wrapped up, right?
No.
I can introduce myself.
You see, you can tell the day is getting long and these people gave me the wrong thing. So you introduce yourself as well.
My name is Asad Ahmed. I'm Managing Director of Gulf African Bank in Kenya.
That's what I thought when you gave me your card, but you see there, I was screwed up. Anyways, but the topic is right. So what I'm going to do is I'm going to start with Admasu, and he's going to share with us his view on the changing face of commercial banking, specifically as it relates to supporting and promoting investment. This whole conference, the theme of this conference is investment, promoting investment, certainly from Dubai with Africa. But Admasu has a broad Pan-African role, especially in the East African part of Africa. So Admasu, tell us from your perspective, what are the changing phases of commercial banking and how is it supporting and promoting investments?
Well, Zamadine, let me start by first thanking you on behalf of all African bankers for differentiating us from bankers elsewhere, because these days it's not very good to have banker in your title. So I think the context of the state of commercial banking in Africa has a lot to do with also the very successful state of the African economy. Most economic players will know that a banking situation is very similar to that of an economic situation, broadly speaking. Just a couple of very quick points. First of all, commercial banking in Africa has become as profitable as it gets worldwide. when you say the changing face of commercial banking in Africa, if you were to go to a classical view rooted in the experience of banks in the 80s and 90s, the view would have been very adverse. Adverse partly because the macroeconomics were so bad, inflation was so bad. And that just resulted in a very, very difficult situation for banks. And you had basically a banking development coming to a halt, in fact, completely regressing. These days, you're looking at double-digit growth. In fact, I was just looking at the case of Kenya's banking sector return on equity in the 2013 survey is being reported at between 35 and 40%. Now, you tell me where in the world you're going to see returns of that nature. And even when you strip out the inflation effect, which is roughly 10%, you're looking at a return on equity of between 25 and 35%. Which is really attractive. It says a whole lot. I think the bigger view around what's happening in banks, capital bases are up like never before. Policies, in terms of risk management in particular, which has been an area of weakness in the past, vastly improved like never before. NPLs have reflected that improvement in risk management. We've also seen a very unsuspected growth in technology. In fact, in the opening plenary session, there was a discussion about IBM choosing to base one of its research hubs in Kenya. Part of the motivation to do that is because of what's happened, not just in payment, technology in terms of M-Pesa, but even now you have M-Kesho, what is not widely discussed. M-Kesho is a deposit-taking innovation along the same lines of what's happened in M-Pesa. You also have agency banking, which is not often talked about. It's not just the electronic and the ICT-based innovation, but also agency banking in terms of organizing outreach to the market in a way that's not been done traditionally. And again, Kenya has been a leader in that. So we're seeing a lot of innovation coming into the market, but we also see a huge amount of recovery coming through. In terms of the bounce back from the past, but also taking advantage of the very low amount of banking in the system. Mm-hmm. The average that we hear of these days is not more than 20% of African households have bank accounts. Right. So when you look at this tremendous growth coming in, you're looking at that as the context of this huge latent demand for banking services that have yet to be tapped. The huge issue in Africa has always been the cost of reach. And the innovations that we've been discussing have really helped the banking sector to leapfrog and begin reaching out to clients in a way that has not been economically feasible in the past. These have been some of the key issues. Of course, regulation has improved dramatically. Even the institutional environment around rights of creditors, enforcement's rights in terms of judgments, getting turnaround on those issues, which again were very difficult in the past. So you've had systemic changes taking place at the macro level, at the meso level, at the micro level. And at the same time, you've seen African banks embrace technology like few others have. Mm-hmm. Of course, this all says profitability is very sweet for now, but we don't know how long it'll last, especially if the Emirati banks start coming through with their excess liquidity, and then we might have a bigger run for our money. But this is the first salvo from my side. Thank you, Samarina.
Very good. It's interesting you picked up on technology. It reminded me of a project that I was involved in many years ago, and there was a bank from India, State Bank of India, that was looking to do business in, let's call it, country X in Africa, and they were being asked what technological innovations they were going to bring to this African country, and they said, we have mobile ATM machines. I'm like, what exactly does it mean? Well, some parts of India are so remote, they had ATMs on the back of donkeys. That was the old way of technological transformation. What Admasu now is talking about is the real technological transformation. So moving on quickly to COMESA clearing. Tell us from your perspective, what are the changes that you see in the banking place and how are you supporting that?
Thank you very much. Just as an introduction, the COMESA Clearing House is one of the institutions of COMESA, the financial of COMESA, run and managed by central banks. So from the central bank perspective, I think it's very important to look at how the environment has evolved you would certainly remember that the bubble burst didn't hit us in Africa. For a very simple reason is that our regulators have been very, very, very strict and very robust in terms of systems put in. Although we have been criticized for having been overcautious, not giving out the money at people or all sorts of collaterals, etc. But this has really saved us. And that is one of the things that the central banks in our region have been doing, is ensuring that what we call the non-performance loans are minimized, so that you give the confidence to the banking sector as such. Now, from there on, you will find that our banking sector also has evolved. Now we have mobile banking spreading throughout the region. Kenya was the one who started with M-Pesa. Now it's going into most of our countries. And there's a link up now between the service provider with the banks. So which means that part that was escaping the market, which was in the non-formal sector, is now getting in the formal sector. Also, our banks have recognized the importance of SMEs, and you find that systems are being put in place now to open up more to the SMEs, which is the real backbone of most of our economies. Right. And let us not forget that Japan, as a country, has developed through SMEs. So I think we have to bear that in mind, and I think Africa is also looking at that. I think this is one of the important things. The other thing was e-banking, which has also spread because of the spreading of internet and broadband. I think you mentioned broadband this one of the sessions in the morning. The spreading of broadband in our region is now helping a lot to open up, not within the region, but throughout the world. I mean, you can sit anywhere in the world, and that this will give comfort to banks that are not in our region to try to see how they can penetrate the region. Right. and make business. I think our friend from Dubai will speak about how GCC can open up. But I think it's one of the things that is very important for us. Now, at the level of COMESA, what we've done is that we, in our central bank's monetary harmonization program, trying to bring harmony into the system amongst our member states, so that we are able, from the outside, you don't have different ratings. So some of our countries will not be rated differently, and that's one of the things that we developed as COMESA and the clearinghouse, is a payment system that is up and running now. And that payment system levels the playing field for all commercial banks in the region. What is happening today in the market is that most, as you will find that our intra-COMESA trade has gone up from 3 billion in the year 2000 to over 18 billion US dollars in 2011. All of it, the payment of which transits outside the region to correspondent banking, and at huge cost. So what we've done, our governors of central banks have said, no, let us have something. Why should our neighbor country pay outside the region when the money can go, right? Mm-hmm. That was not happening because of the non-recognition of our own commercial banks in the region. Now, this system now is driven by central banks, which licenses the commercial banks of all the central banks of COMESA, commercial banks of COMESA. And in that process, now we are able to say Bank A in Zambia can deal directly with Bank B in Zimbabwe or in Burundi. I think these are some of the innovations that we brought in, which is going to give the comfort and the guarantee for payment and for transacting in the region.
Very good. I mean, I think you're touching on the same themes that I think Admasu was talking about, especially the use of technology, but the harmonization part is more interesting. But I want to come to Emirates. Obviously, you're not in Africa, at least not yet. You don't have a physical presence in Africa, but you're a significant financial player in this part of the world and in the rest of the world as well. So I'll ask you the same thing that I asked. What are some of the issues that you see, the growth that you see, and how do you contribute to the growth from an Emirates Bank perspective?
Sure. Thank you very much, Egatu. Before I answer the question, I would like to say that as Emirates NBD, we are honored to sponsor this event as a diamond sponsor. Apart from our commitments to support the government of UAE in general and Dubai in particular we are, there with all their initiatives. As far as Emirates NBD being in Africa and their roles, yes, so far we don't have a presence, but we are going to have very soon, okay, an active, I would say, financial activities in part of Africa, that is Egypt. As you are all aware that we have acquired BNP Paribas in Egypt. So we are expanding our footprint in Africa. We are exploring all the opportunities in other parts of Africa other than Egypt. Just to give you an example, in 2011, we did not have much of transactions or businesses with Africa. However, compared to 2011 and now, I can tell you we have increased our appetite, in terms of country limits and bank limits by 45%. So this gives an indication how Emirates NBD is keen in expanding and exploring the opportunities within the African banking industry and, in general, the Africa as countries. So I would say that we would want to, seek the opportunities. We would want to, see that, we understand, the partners, and the partners also in Africa understand us. We would want to know the story of Africa. To be honest with you, yes, I would admit that, we can do much more. There are rooms for us as Emirates NBD, and it's not only about Emirates NBD. I'm not here to, only promote for Emirates NBD. In general, I'm talking about, the GCC and even, international banks. When we would want to, enter a market, we would want to understand our partners. We would want to also have the story of these, countries. So it's not that, we would want also people to come and tell us about the story, and definitely we are there to, do the businesses with them.
You happen to be fortunate to be based in a region that has excess liquidity, I suppose, right?
True.
And what I hear you is saying you're looking to deploy quite substantial portion of that in Africa.
That's right.
Good. You heard that, right? So, you might want to get his business card before he gets off.
As I said, we get the right, I would say partners.
Right.
Okay, right projects. Yes, we are there to, invest directly into the projects and indirectly through, any transactions through the, I would say, banking institutions. Right there.
It doesn't have to be a UAE-linked business, though, right?
Well, we as Emirates NBD, I would say, follow our, initiatives of our government, and also we, follow the requirement of our customers. Mm-hmm. Therefore, if we see that there are opportunities of our customers in if we see the opportunities in Africa or any other countries for our customers, definitely we would study this, and we would make ourselves meeting these requirements.
Okay, excellent. Now I come all the way down to the other end. It's a bank based in Kenya, and it's Islamic banking, right? So you're a little different than one or two of these. So share with us, from your perspective, what are the opportunities and the challenges, and how do you support growth in this specific area that you're operating in?
Sure. Thank you. But I want to make 2 points before I start. One is, I moved to Nairobi about 1.5 years ago. I was living in Dubai. I still sort of part live here. And I was CEO of a bank in Dubai. And I moved to Nairobi with Gulf African Bank because when I went to visit Kenya, when I went to meet the bank, I just found that the opportunity to grow banks there and to grow Islamic banking there was so tremendous that it would be foolhardy of me not to be part of that process. So that's what from a personal perspective, that's how I see Africa, how I see Nairobi, how I see Islamic banking. The second thing is that we've been talking all morning about how Dubai has the initiative and has the vision. Gulf African Bank was set up in 2007, and Istithmar was our largest shareholder. So way back, before Africa became the darling of the community and everybody's talking about it 6 years hence, Dubai was already investing in Africa. So that speaks for the vision, not only that they have here, but what they have in Africa. When we started our Islamic banking operation, and we're not a huge bank, but we're large enough for Kenyan size. We have about 40,000 accounts. And we have now started looking back at those accounts, and we find that almost a third of those accounts are first-time bank customers. So for reasons of faith or for whatever reason, a substantial part of the community, it was not banking. Now, in an African context, that's not new. I think 65% of Africa is unbanked. In some countries, in the rural areas, 20% of the people are banked. In countries like Malawi and Senegal, banking is 5 to 6% of the entire population. But in Kenya, we are making a difference. We're a number of new customers coming in, and we can see the growth stories. We can see the stories, how we're actually making a difference in people's lives because they can now have access to financial capital which they did not have. We are the largest Islamic bank in East Africa, and I guess to some testimony of what we're doing right, IFC, the International Finance Corporation, has just taken a 15% share in our bank last month. So they did all the due diligence, they did all the works. But so it's not just us in the bank and the shareholders who think that there is growth for Islamic banking and for banking generally in East Africa and Africa, but also if this is the first investment of IFC in an Islamic financial institution. So even they see the story coming up. So yes, there are lots of challenges. We have a tremendous amount of challenges. We don't have a separate set of rules of governing regulations in Africa, so we work on exemptions from the central bank. The legal system is untested. We don't know what happens when a Murabaha contract will go into court, how the courts will see it. So there are definite challenges, but the government of Kenya and the central bank have been very supportive in setting this up. And recently, we've now, on the Kenya Bank Association, we're now setting up a committee for Islamic Sharia compliant banking to be able to interact with the central bank in terms of products and in terms of its the growth of Islamic banking in Kenya. So yes, there are challenges, but I think the future is absolutely bright.
So do you see Islamic banking expanding in the region?
Without question. Sorry, you were going to say something?
Yeah, go ahead.
No, I was saying that without question, Islamic banking is going to expand. There are about 8 or 9 countries today, Morocco, Chad, Uganda, Tanzania, who have set up task forces or at some degree of setting up regulations for Islamic banking. Kenya has 2 banks and a number of windows. Uganda is looking at 3 applications. Tanzania has 2 banks now. South Africa has 2 institutions coming up. So 25% of the billion people are Muslims in Africa. There are 14, 15 countries which are Muslim majority. So I think, yes, Islamic banking is definitely on the rise.
And just one last point on that. You said that you have 40,000 customers. And you said most, if not all of them, are first-timers into opening bank
One-third
account.
approximately.
One-third.
Yeah.
Was there any particular reason? Was there reluctance for them to open regular banks? Was that the main reason?
I think it was primarily reasons of faith, that the Muslim, some members of the Muslim community had opted not to bank, waiting for an Islamic institution. So I think it's they now have a window, an avenue to bank. So.
All right, I want to come to Admasu now. I mean, you are actually not a typical commercial bank, right? I mean, you're a development finance institution. How many countries do you operate in?
About 17 countries now.
17 countries. So from, so you have a unique Pan-African perspective, especially from a development angle. What are the sort of the sectors that you see that require most of the financing? It doesn't necessarily mean PTA, but overall, what do you see are the needs, the greatest needs for financing in what sectors?
It's an interesting question, because if you were to ask the same question about 15 or so years ago, you would hear the response being very similar to what international banks have typically invested in. It would have been mining, commodities, essentially. Those would have been the two main ones. Of course, these days, we're seeing very diversified growth coming through, and along with that growth has been demand for credit coming into sectors like construction, infrastructure. Agribusiness is up in a big way. In fact, agribusiness is up in a very big way in East Africa in particular. And the anomaly there is you find commercial banks in East Africa doing a lot of business in agribusiness, unlike their counterparts elsewhere in the So agribusiness is one area. Of course, ICT has been an area as well, but that's been more on the longer-term financing side. I think what's been very interesting is when you look at bank balance sheets today versus, again, 10, 15 years ago, you see a very interesting transformation that's occurred. And that transformation has been the composition of their assets. The old days, most commercial banks in Africa were accused of being very lazy and just literally putting their liquidity into government securities because of the lack of credit-worthy borrowers and the like. Today, you look at African bank balance sheets, it's the reverse. The large majority is now invested in the real economy, and you find government securities as being a much smaller part than it ever has been. That alone tells you that bank funding is going now to finance the real economy. I think what's been very interesting to notice as well as part of the changing face of commercial banking in Africa is, again, today we have this unusual phenomena of an explosion of cross-border banks. There's about 7 or so banks now that have operations in more than 9 countries, and these are African banks. And again, if you were to just go back 10, 15 years ago, you would have found only South African banks doing that in a very small part of Southern Africa, the SACU countries where they've had common monetary union. You've had a little bit of that in West Africa. But now, if you were just to draw a map of the continent, you can see an explosion from the south. Of course, South African banks have been very aggressive. Moroccan banks have been also very aggressive, coming from the north. Nigerian banks in recent times have also moved east and south and into the center. And now we also have a growing phenomenon of Kenyan banks moving into the continent. I think the question, maybe since we're here in Dubai, is where are the Gulf banks in the mix? And I will try not to answer that question. I'll leave it to my distinguished colleague on the panel.
We got Emirates here. But am I to assume your risk tolerance is higher than, say, a typical commercial bank, right?
Correct.
And you would do deals that they may not do, right? With longer term tenure and things like that, right?
Yeah.
Okay. I want to ask the same thing of Emirates. I know, as I said earlier, you're not in Africa yet, but you did indicate you were moving into Egypt and other places. What are the sectors that you see needing the greatest financing needs here in the businesses that you're operating in?
In UAE, well, we are in fact in each and every activity within UAE. However, if I would talk about Emirates NBD, see, if you would look at our income distribution, till recently it's mainly of Dubai and UAE. However, we are trying to capture something like 25% of our total income from the international market. And I see that Africa is a great opportunity for us. And that's why we are trying to explore all the I would say business opportunities which fits within the criteria of financing of Emirates NBD. And as I said, it's not restricted to any industry. We are keen to do project financing in Africa, and I don't know what's the problem with this mic. It falls. Okay.
You're a key sponsor, that's why.
Sorry for this. So what I'm saying is that we are very much open and keen with regard to financing project in infrastructure, oil and gas, commodities. These are all sectors that we can explore the financing in African countries. We have no, I would say, barriers with regard to which country, subject that, as I said, the credit meets our criteria of financing.
Right. Just to pick up on this point about barriers, I want to move on to COMESA. Again, from looking at it from your vantage point, I know you're the clearinghouse, but when you look at the competitive landscape of banking in Africa, what do you think are the barriers, and what does the competitive landscape look like from where you sit?
I think one of the things that is interesting is that this morning I think the Secretary General spoke about the COMESA Common Investment Area in the context of looking at COMESA as one global entity. And in that context, we are also at the level of the central banks looking at how we can harmonize and bring legislation so that any bank operating in any one of the COMESA countries can operate in the others within the same legislation that will apply for that entire region. Okay. And I think what is also important, I think you mentioned this question about a problem of litigation, which has not happened yet. Sure. Now, within our own treaty, we have set up what we call the COMESA Court of Justice for arbitration purposes. So any case within that jurisdiction will then be referred to one point, which is the COMESA Court of Justice, to sort out any arbitration. So from that point of view, we're looking at regional banks, and then at the same time going Pan-African as well, so that we are sure anybody from within the community is able to be treated on the same level at par with any other country in which it is operating.
But it's not designed to prohibit.
No, certainly not.
Institutions outside of COMESA.
No, the whole idea is once we harmonize within COMESA, then it becomes easier for any bank from outside to come into that region and therefore operate. So once you've leveled the playing field for within that region, it becomes any bank, say from the Gulf or from Dubai, for example, to come into our region and then operate with all the safety and all the comfort they would require.
And now, if I was just to ask you from the Gulf Africa Bank perspective, I know you mentioned briefly that you're newcomers to the marketplace and there are others starting to come. How do you see that? Is that changing more and more entrants into the marketplace? I know you talked about the regulation being a hindrance. I mean, maybe can you elaborate on that?
Yeah, I think there will be. Look, I think consolidation needs to happen. There are, in not just in Kenya, but in a lot of African countries. I mean, we have 43 banks in Kenya, and the other countries have similar large numbers. Capital requirements are still very small, it's $12 million to set up a bank. That doesn't go very far nowadays when you have to buy risk management systems, which cost a couple of $1 million, just to be able to do one set of the system, forget the mainframes and the other stuff. So there is an increasing number of, the Islamic banking side is definitely increasing, but I think there will be consolidation on the conventional side. But on the regulatory side that you were speaking about, I mean, I think we're trying, but there are still many challenges. You can't, Kenyan banks, for example, can't open branches in Tanzania and Uganda. So you have to commit separate capital. Now, nobody's got that much spare capital to pass around. There is no concept of home regulator, which is there in Europe, that wherever the head office regulator is, that central bank becomes the primary regulator. There are differences in terms of reporting requirements. So you not only have to get your system at the home country wired up, but if you want to do automated reporting, because definitions differ of what needs to be done. So then you have to have, essentially 3 separate set of reporting requirements if you just wanted to do ESC. So I think yes, there is progress, but I guess if you've come in from outside, you see a little bit more glaringly than when you've been sort of homegrown.
Right. I want to pick up on something that I talk about a lot, which is earlier in some of the sessions there was a discussion about the need for Africans to move up the value chain. And I know we were not talking about the banking sector, but when I come to the financial service sector, maybe Admasu you can pick up on this. How critical is it for Africans to be owners of these institutions, which are wealth-creating assets? I'm talking about the banks. How do you promote that? Because globalization and now all African countries being required to be members of WTO are now opening up or have already opened up their markets, and these big giant global financial institutions flooding into Africa, right? So how is this going to pan out, and how do we as Africans ensure that we have a piece of the pie, as they say, as opposed to be, I spent many years in Latin America. I used to work in Brazil, and prior to that Argentina. At one point, 85% of the Argentine banking sector was foreign-owned in terms of market share. Of course, we know what happened in 2001. They had the world's largest sovereign debt default, okay? Now, I don't want to directly link it to there. Maybe there was some... But in Africa, as we start growing, as we start becoming prosperous, so that we don't just become sort of bystanders, right? Is it through joint ventures? Is it through creating... So how do you see that panning out?
Well, I think you raise a very passionate question that is debated a lot, because there's always this view that Africa is dominated by foreign banks, or many African countries don't have the benefit of having their own banks. And so they import policies and risk perspectives and all sorts of things from head office, as it were. What is an interesting case to perhaps look at is the story of Uganda. In 2005, Uganda had a moratorium in place on new banking licenses, and they opened it up in 2005 very broadly. And in the 7 or so years since, there's been 11 new banks that have popped up in Uganda. The branch network in Uganda has quadrupled in that time. At the same time, when you look at the growth in extension to the private sector, credit extension to the private sector, it's gone up from what was around 13% to close to 20%. So, of course, it's from a very low base, but still a very sizable increase. So prima facie, the purpose of banking is to intermediate and to increase the extension of credit, right? So there is very strong evidence that suggests that if you do provide some degree of space and you have competition, it actually benefits the economy. Of course, the issue is regulation, and how best do you do that? I think the size issue is very important, consolidation, I couldn't agree more. The question is, when does that consolidation come through? I think regardless of opening or not opening, I think there is a structural problem in banking generally when it comes to economic development. The structural problem has to do with how do you finance long-term assets. Infrastructure is such a priority in the continent. Is it reasonable to expect commercial banks to be the solution? And I don't think it is. So there are some issues there that need to be dealt with at a different level. We need to develop other financial institutions, bond markets, stock markets, public-private partnerships, other kinds of innovations that allow us to channel funding into that critical asset class. So I think there is a lot to be said for continued reforms and institutional development. I think there are a number of countries that have been very wary of opening up, and I think it's partly an orientation issue among other things. Difficult to discuss in a platform like this, but I'll leave it at that.
Especially as the CEO of a PTA bank, right? But I want to follow up with this with Emirates. I mean, I know you are the biggest bank here, right?
In terms of assets.
In
yes.
terms of assets.
Yeah.
So you're dominant here, and you're an Emirati bank, right? I mean, so how do you see it from your perspective of this concept of, you guys have to own the vast majority of the assets of the banking sector and all that? Does that contribute or hinder the growth in the banking sector here?
Well, it's, I would say, very challenging for us. I mean, that's why we are trying to seek opportunities outside, I would say, the UAE. We, I would say, by market share, having like 20%, if I'm right, yes, 20% or 25% of market share is, of Emirates NBD. So we see to that, the growth within the country. It's, very challenging for a bank like us. It's not only from business point of view, even risk point of view. So that's why we are trying to diversify and, see the opportunities in other markets, the GCC, the Asia, Africa, exactly. So all these, markets, we are trying to, see how we can expand our footprint. So this is what I can say about.
All right, very good. Now, as I said at the beginning, I'm looking at the clock. It seems like we've exhausted what we were officially allotted for the panelists. And what I'd like to do is there is somebody who goes around with a wireless mic. And if anybody, oh, wow, I already see lots of hands. Oh, boy, there must be a lot of bankers in this room. Okay, so we'll start with the front, okay, and there, and then we'll go in the back. So the lady here in the front, yeah. Please tell us who you are and who you direct the question to, or if it's for everybody.
Good afternoon. Thank you very much for the time and the valuable information. I think all of us are very amazed and interested of the organization and the professionalism of the whole event and of the speaker as well. And I'm totally away from the financial sector, which is very interesting for you, but I am into the market, so I'm full of market information. So my question is for Mr. Kazem. I'm sure that you are aware of that HSBC is downsizing and they are shutting down in the Arabic country. The first one is Egypt, the second one is Jordan, and they are withdrawing from the markets. What makes me impressed is that you are confident that you will make success in those markets and you will enter the first to Egypt with all the political unsustainability. Did you consider this case from HSBC before entering such markets in current situation?
Okay, thank you very much. Okay, I would not talk about, HSBC, whether they are downsizing, right-sizing, or whatever they do. I'll talk about, our vision, our strategy. We look at things, from long-term perspective, and we don't look at, the business opportunities and investment on a circumstances basis or a short term. So I can tell you that proper due diligence has been done, okay, before we enter into any investment, and not only this particular one.
Yeah.
He was, obviously you noticed, he's a very smart banker. He didn't want to comment on whatever challenges his competitors are facing. He said they might as well do it themselves. So he rightly avoided that, but that was a good question. The next one is right there. Oh, okay. He has the mic, so we'll go and then we'll come to you next, okay?
This is a question to Kenyan banker. I mean, I was amazed that when you said that it is 35 to 40% is your return on capital. And what is the level of NPL in your region in terms of, particularly, you may book a lot of profits, but the point is that what is the gross and net NPA levels in your banking system? That's one. Second is about consolidation. The way the banking system is emerging in terms of getting into high technology oriented, and technology adds to cost saving, but at the same time heavy capital investment is involved, and you also have to take care of international compliance requirements in terms of Basel II and Basel III. So down the line, consolidation is the need of the hour. Probably you can take a cue from your neighbor, who is, the bank is very successful in terms of consolidation. They already merged with NBD, now they have merged with Dubai Bank, and that is the need of the hour at this juncture for bankers. The question to Emirates NBD is that when you're trying to enter these regions, are you trying to think in terms of entering as an entity on your own, or you would like to go for a strategic alliance to start with, to test the waters and then get used to the environment, then subsequently expand yourself? Thank you very much.
Okay, well, I'm sorry, I don't think I heard all of the question, but I think you had a question around return on capital, our NPL levels. Well, let me just first say that we are a Kenyan bank, but we're also a bank of 17 other countries, so our numbers don't quite mirror the Kenyan commercial banking benchmark. Our return on capital has shot up to close to 15% in dollar terms. The difference is we have a dollar balance sheet, the Kenyan banks have shilling balance sheets. That's why earlier on I said even if you were to take out the inflation effect and almost dollarize, if you like, the shilling-based balance sheets of the Kenyan banks, you would be looking at an ROE level of almost double what we have. But we are a trade and development bank, so we don't have a depositor base like the local banks do in Kenya and so on. So we're not as profitable as they are. But of course, by international standards, we are very profitable. Their NPL levels, again, the survey, the numbers that come to mind were single digits, roughly plus minus 5%. And again, as you know, commercial banks don't take a great deal of risk. And of course, that's why the investment levels are very high in banks. If you look at the flow of funds coming out of Europe, including in the development finance space, there's a very strong focus on banks, because everybody thinks that apart from the telecom revolution that we've had over the past 10, 15 years, the other very sweet story in Africa has been banks. And the question is, what's going to be the new story going forward? And I think, again, this morning we've heard a lot about power. Zamadina, you've talked a lot about the power sector. There's a lot of very key reforms that have come through in the power sector in recent years. Key one being the tariffs, the regulated tariffs that allow power to be priced now in a much more reasonable way that allows utilities or independent power producers to essentially recover their costs and even make profits. And as that momentum continues, I think we're going to see that third sector become very profitable. I think one thing I failed to mention earlier on in terms of the balance sheet of banks and what are they financing, what are they investing in, trade finance has been also a very prominent area of activity for many commercial banks in Africa. Roughly 20% or so of their balance sheets have been directed to trade finance. For us, it's almost 2/3. We have 2/3 of our balance sheet in trade finance, but of course trade finance is multi-sectoral, so that covers a whole lot of sectors. Yeah, I think, I don't know if I've missed anything, but you can help me, Zahmiddin, if I've not picked up any other. Well, consolidation, I think we've seen, there's two key reforms. One is consolidation. We've seen what that's done to Nigeria. It's coming to Kenya, from what I understand, and I think it'll be going elsewhere too, for obvious reasons. I think banks, you don't want too much concentration, but you don't want too much fragmentation either. There's a very strong correlation between profitability and size of bank. It's not the only correlation, but it's an important one. So I think there's a systemic case to be made around consolidation, and I think in Africa you have a lot of very small banks. I think if they're specialized and if they're microfinance and so on, it's okay. But I think for mainstream banks, there's a case to be made for consolidation. I think the other key issue that's coming up is capitalization requirements. It's linked to consolidation, of course, but that's also a very interesting trend we're seeing. We've seen what Zambia has done in that regard, and Zimbabwe has also followed. There's been a lot of reaction to that domestically as well, whether that applies to domestic banks or foreign banks. In the case of Zambia, they've differentiated between the domestic and the foreign banks. And I think part of the motivation for that reform has been the observation that regardless of the very high returns we're seeing in commercial bank activity, those returns are not always being plowed back into the economies from which they're being earned. And I think this has caused regulators to say, well, normally you would say if profitability is so high, you reinvest because you won't find that performance elsewhere. But in Africa's case, many countries have observed that very strong profits don't always come right back into the economy. So that's why they're lifting the capitalization requirements, is to deal with that issue. The jury is still out as to whether that's going to produce the results that we all want to see. But maybe 2 years from now, we'll discuss it here again.
Right. Just on this point, I'm sorry?
No, please, go ahead.
Just on this point of profitability, I don't know if Admas was referring to some of the banks that we've invested in our own country, but the banks in Ethiopia pay on average around 35 to 42% dividends annually. Now, I always said that, I live in the U.S., so if the banks in the U.S. pay those kinds of dividends, the FBI wants to know what it is you did. But in Ethiopia, you get your money back in 2 years and 2 months at those rates. So it's a very unique market. I don't know if it's being replicated in other parts, but I always use that as a reference where Citibank sends me a 3% dividend check in a good year. There's another question right there in the front.
Sorry, I think there was another question with regard how Emirates and GCC Bank prefer to enter into countries in Africa. So again, we I would say are open to a direct investment and a strategic partnership with partners or through, I would say, banking desk with a financial institution. So all the, I would say, options are there, and we are open to that.
Excellent.
I think you mentioned about Basel as well. I think all our banks are fully compliant, and we make sure that this happens in our region. But what is also important, I think you mentioned about capital adequacy ratio. Some of our countries have gone to $10 million. Zimbabwe now has gone to $10 million. So this is also being increasing in most of the countries to make sure that these banks are very sound.
Okay, next question.
Actually, I have a message to the panelists, especially PTA Bank and Emirates NIPAD. And this is about the information gap as far as bank linkages between GCC banks and African banks. We see a lot of trade activity now between GCC and Africa, but most of this trade, as far as banking, trade finance transaction, is done through European banks, okay? We would like the panelists to sponsor some sort of a forum or a committee to promote bridging this information gap. Bridging this information gap, especially the inaccurate perceptions about Africa business risk, in order to have direct relationship between GCC banks and African banks. Not only that, but to have presence for GCC banks like Emirates NEPAD in African countries. And we have seen the returns, okay, on investment on African banks. The second point is to get some sort of corporate advisory services by PTA Bank and Emirates NEPAD, okay, to high net worth individuals and big corporates in Africa and Dubai in particular, okay? We have so many products which we export to Europe, okay? I'll just quote a few: coffee, cocoa, gum arabic, and oil, okay? And with a little bit value-add manufacturing process, the prices are more than 5 times the export prices that leave Africa. Now, this is a big market for GCC investors. If they are averse about African risk, they can have it in the free zones here in Dubai or Abu Dhabi or any free zone in African countries. And that will generate more value add for the manufacturing sector in Africa, and it will create jobs and employment and prosperity to the banks in Africa and the GCC. Thank you very much.
All right, good. That was a message, so it's not a question, and I'm sure they made notes of that. We have 2 minutes for 2 quick questions, right? So, wow, can we go this side if you don't mind? We've already covered. All right, so I start with you, and then I go there, and then we wrap up, okay? Yeah, the gentleman in the back, right there.
2-part question for Mr. Admasou. The first part is in terms of the ICT application in the banking industry in Africa. I would imagine that would be probably a bit different than what we do in Europe or Canada or US because of the literacy level of the clients. Okay. Did you get the first part, the first question? So it's just how do you apply the ICT, in terms of the banking industry in Africa to serve as the clients? And the second part is liquidity. As Zebedno was talking about, like, for example, the tremendous opportunities in Ethiopia. How do you solve, the liquidity problem? To fund some of these amazing opportunities that some of these African countries are. We're like, how can banks actually get their liquidity?
Okay, those were for Admasou. So quickly.
Yep. I don't think I picked up the whole question again. I think there's been some echo, but I think for PTA Bank, we are a corporate stroke trade stroke investment bank, so we don't quite have a network that can allow us to benefit from technology in the same way that ordinary deposit-taking commercial banks do. So in terms of our own use of ICT, it's been mostly fairly generic stuff such as enterprise-wide systems, treasury systems, and risk management related systems. So we've not really been in a position to take advantage of the real technology driving innovations that have helped commercial banks. I think the liquidity issue is a very interesting one. You have a natural structural problem with the transformation of liquidity into term lending. We are fairly well off in the sense that we're specialized, and part of our business is particularly directed to term lending, 5, 10, some cases more years. But commercial banks, of course, have an inbuilt problem there. So the solution really is about creating other financial institutions. And again, when we talk about other financial institutions, we've recently begun rolling out a special purpose fund, an infrastructure fund that will be with PTA Bank. We'll be holding discussions with sovereign wealth funders here in the GCC area. It's a special purpose vehicle that we've ring-fenced within our business, and the whole idea is to enable us to do much bigger quantums of long-term investment, both subordinated debt and equity as well, in infrastructure. That will help deal with the liquidity issues. We're targeting sovereign wealth funds, pension funds, insurance companies, those that have appetite for that kind of investment. But the short-term liquidity is quite limited in terms of transformation. So I don't know, my colleagues may have more to say on innovations there.
Okay. All right, one last question, very quick. You have 15 seconds.
My name is Krishna Kumar. I represent an infrastructure development company. The question is to Mr. Adnashu. Wanted to know what kind of products are available for developers like us to raise debt funding from PTA Bank, especially in the context that many of the infrastructure projects we need local or domestic currency funds, long-term funds, because our revenues are in local currency. So a developer like us can take equity risks, but taking long-term debt interest exchange rate risks is difficult on a project basis.
Okay. That was the last question for you. Yeah.
I agree with you. I think entrepreneurs should be bearing equity risk and not the other kinds of risks. We have some solutions as a specialized institution. We're looking for smart partnerships. Those partnerships, I think, part of having this kind of event to tell the story of the region and some of the successful institutions in the region, such as PTA Bank, is to bridge the information gap. I think that the gentleman from Sudan, who's now here, has highlighted. And so we are trying to create opportunities for those partnerships. I think on our short-term side, because we're also a very strong trade finance bank, I'm very pleased to say that last year we had the first occasion where an Emirati bank gave us credit, participated in a syndicated loan that we managed to launch in London, and out of the 12 or so banks that participated in that syndicated loan, we had an Emirati bank and an Egyptian bank, and also a Mauritian bank. And if I go on, I can also say a Ghanaian bank and a Nigerian bank. The reason I'm highlighting this is because this is the first time we're beginning to see very strong interest in an African financial institution by non-traditional, non-classical banks from Europe or the US. We even had a Japanese bank for the first time subscribing to our syndicated loan. That GCC bank is participating somewhere in this forum. I won't mention it, but there'll be others who will come. We are also an investor in Gulf Africa Bank, just to be a little bit honest. And again, to the benefit of the audience, the Emiratis in particular, there was a GCC investor in a bank that had to recapitalize because they were so successful that they needed more capital. Their numbers were great. And when that new issue came out, most of the shareholders jumped and the GCC investor didn't. Up until something happened, I don't know what it was, that GCC investor realized that they were missing the boat on this recapitalization. They came in on the first round, but didn't come in on the second round. And just before we closed, the GCC partner actually put a stop in the works, delayed the whole process, and said, this thing is not going on without me. And they actually came in and they participated, and we all had to be patient, but at least we're happy to see.
It was a nice problem to have.
It's a good problem, so I'm saying I think GCC is coming along, slowly but surely.
I don't know which bank you're talking about.
All right. As I said, we can go on and on and on, especially with a lot of interesting bankers on stage who earn their bonuses, as I said at the beginning. But unfortunately, we have run out of time, but I want to wrap up, at least from my perspective, what I thought I understood were the main themes. I think all of them agree the opportunities are great. They're willing to do business. Opportunities in the Islamic banking sector is huge. It's still just getting started. The COMESA clearinghouse, the harmonization process is trying to facilitate things for banks to do business cross-border. PTA Bank, as Admassu just described, he talked about some of the issues that are going on, the capital base increases, the risk management that need to be enhanced. And I think the common theme with all of them was technology, of course, is a key enabler, probably just like the mobile banking did to Africa, which is leapfrog some stages of development. Probably in the banking sector, we might see the same. Emirates Bank, we heard a lot of good things from them. Not only are they the gold or major sponsor of this conference, but they're also looking to expand into Africa. in a very interesting way, he just described at the back end some of the innovative ways that they would be looking to partner with institutions in Africa. So these are all good things, new things. If I were you, I'd come up on stage and exchange business cards. These are the money men, so you may not get a chance to see them again. But before we wrap up, I want you to give them a very warm round of applause. And thank you very much.